Clouds of uncertainty continues to hang over the prospects of the peace deal between the United States and Iran, and tensions have now escalated further. In a significant move, the United States has imposed fresh sanctions on a major China-based oil refinery, along with around 40 shipping companies and tankers allegedly involved in transporting Iranian oil. This development comes just weeks ahead of the President Donald Trump's planned visit to Beijing, where he is expected to meet Chinese President Jinping. According to reports, the refinery targeted is Hengli Petrochemicals located in the port city of Dalian, with the massive capacity to process approximately 4 lakh barrels of crude oil per day. It stands as one of China's largest independent refineries. Since 2023, Hengli has been processing Iranian oil, generated substantial revenue in the process. It is also among several Chinese firms identified as consistent buyers of Iranian crude. Despite ongoing international pressures, China remains the largest importer of Iranian oil, reported accountabilities for over 80% of Iran's exports. Much of this trade is conducted through what analysts describe as a shadow fleet of vessels, often operating through indirect routes and obscure origins, including shipments routed via countries like Malaysia. These methods have allowed Iranian oil to continue flowing into global market despite sanctions. The latest US actions is part of a broader maximum pressure strategy aimed at cutting off Iran's primary sources of revenue. US Treasury Secretary Scott Bessent had earlier warned that countries purchasing Iranian oil or holding Iranian funds in their financial systems could face secondary sanctions. These measures are considering particularly severe as they extend beyond direct dealings with Iran to penalize third-party entities. In line with this approach, the US Treasury has also issued warnings to several regions and jurisdictions including China, the United Arab Emirates, Oman and Hong Kong, cautioning them against facilitating Iranian financial or oil-related transactions. Washington has accused these networks of enabling what it calls Iran's illicit economic activities. The sanction announced targets what US officials described as a vast and complex networks of vessels, intermediaries and buyers that helps Iran move its oil across international markets. The administration has framed that this as a decisive steps to disrupt Iran's energy trade and limit funds that it claims support destabilizing activities in the region. In response, Iran has strongly criticized the sanction and called for their removal. China has also voiced oppositions, condemning the move as an abuse of unilateral sanctions. A spokesperson from China's embassy in Washington stated that such actions undermine international trade norms, disrupt legitimate economic exchanges, and oppose the right of Chinese companies and individuals. However, the broader geopolitical tensions remains evident, as Beijing argues that such measures risk politicizing global energy markets and harming lawful business operations. Meanwhile, the sanctions also extends to nearly 40 shipping firms and vessels, tightening restrictions on Iran's already strained oil export networks. Previous sanctions have also forced traders and refiners to adopt increasingly complex and opaque methods to continue operation, often involving higher cost and risk. This latest escalation comes at a sensitive time as the United States and Iran prepare for other round of discussions amid ongoing tensions in the Strait of Hormuz, a critical choke point for global oil supply. Maritime disruptions in the region have already had noticeable impact on energy flow, adding further urgencies to diplomatic efforts. As the situation unfolds, the world watches closely, with concerns growing over how these economic measures will influence not only US-Iran relations but also global trades, dynamics and energy securities. That's all for now. Stay tuned with us for more updates. Do like, comment and subscribe our channel.